Hello friends, this is Denario Research and welcome to the part number 7 of cryptocurrency trading tutorial. In this video I'll talk about support and resistance levels, the important components of range trading. Support and resistance represent key points where forces of supply and demand meet. These points on the chart are here, 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 and here. Well, in financial markets, prices are driven by excessive supply downwards and demand upwards. Well, supply is synonymous with bearish, selling, bears, while demand is synonymous with bullish, buying and bulls. As demand increases from this point, price goes up. When supply increases from this point, price goes down. When supply and demand are equal, like here, price moves in a sideways, as bulls and bears slug it out for control. Support is a price level at which demand is thought to be strong enough to prevent price from declining further. As you see on the chart, it's 30 minutes Bitcoin to USD chart. Price cannot break the level of 1200 for almost 12 hours. Well, the logic dictates that as price declines towards support level, so moving here, buyers become more inclined to buy at this moment, and sellers become less inclined to sell. By the time price reaches support level, it is believed that demand will overcome supply and it will prevent price from falling below support, which is actually true for quite a long period of time. Support does not always hold, and break below support signals that bears win out the battles over the bulls. Typically it happens with a long red candle, like on the chart. A decline below support, so when the price goes downwards, indicates a new willingness to sell or lack incentive to buy. Support breaks and new lows signal that sellers have reduced their expectations and are willing to sell even at lower prices. As you see from a chart, sellers were keeping price about 1200 for 12 hours, and suddenly they are ready to sell at far lower prices. In addition, buyers could not be coerced into buying until prices close below support level or below previous low. Once support is broken, another support level will be established somewhere here or even higher here. But it would be, of course, it would be a quite lower level than previous support. Well, where is support established? Support levels are usually below the lowest close values of the price, so like happens here. But it's not uncommon for a coin to trade at or near support levels, like here. But technical analysis is not an exact science and sometimes difficult to set exact support level. So should it be here as I have drawn, or should it be a little bit upper above this level here, or lower and crossing this lowest low. And in addition, the price movements can be volatile and sometimes dip below support briefly, like actually happens here. And for these reasons, some traders and investors establish support zone. They are the same as a support level, but instead of straight line, support zone is a range, like it might be start here and end here, and actually has the same options and actually characteristics as the support level. Now let's go to resistance. Resistance is a level at which selling is thought to be strong enough to prevent price from rising further. As you see, price cannot break this level for quite a long period of time. The logic dictates that as price advances toward resistance, so from this point to this point, sellers become more inclined to sell, and buyers become less inclined to buy. By the time price reaches resistance level here, it is believed that supply will overcome demand and prevent price from rising further above resistance, and price will reject from this level and go here. But resistance doesn't always hold, and break above resistance signals that bulls have won battle over the bears. Typically, resistance is being broken with a long green candlestick, and you see volume below is quite high as well. A break above resistance shows a new willingness to buy or lack of incentive to sell. Resistance breaks and new highs indicate that buyers have increased their expectations and are willing to buy at even higher prices. As you see from the chart, buyers were keeping price below this level for quite a long period of time, and volume, as you see, was not so heavy. But suddenly they decide to buy at higher prices, and they actually buy a lot, as you see from the volume. In addition, sellers couldn't be coerced into selling until price closes above resistance or above previous high. Once resistance is broken, another resistance level will be established somewhere above previous level, so it might be somewhere here or even higher. So, where is resistance established? Resistance levels are usually above highest close price values, as here, here. But it's not uncommon for a coin to trade at or near resistance level. In addition, price movements can be volatile and rise above resistance briefly. As it's happened here, we have had some resistance break, but price rejected from this level, and several attempts of break here and here. So, as for support, some traders and investors established resistance zone. They act as a resistance level, but actually capture a bit broader range, so it might be from here to this level. Identification of support and resistance level is not always easy, but here are some basic rules. Rule number 1. Support and resistance levels are close to round numbers, because psychologically traders are reluctant to buy or sell coin above or below certain round number. Let's look at the example. This is Bitcoin US dollar 1 hour chart from BTCE. And as you see from a chart, at this point, buyers couldn't break the level of 1800 US dollars per Bitcoin, which will serve us as resistance level. Second rule is double rejection. If price rejects from the same level at least twice, it may be considered either support or resistance. Let's look at another example. It's Ethereum Bitcoin 15 minutes chart from Polonix. This is first point where price rejected, then price goes down, goes up again and rejects from almost the same level as the first time. We have a double confirmation of the same level. Then price goes down and rejects from the third time. So this is bold confirmation that we have resistance level somewhere here. Another principle of technical analysis stipulates that support can turn into resistance and vice versa. Once price breaks support level here, the broken support level can turn into resistance, which happens here. The breaks of support signals that forces of supply have overcome forces of demand. Well, supply was higher than demand at this point. And therefore, if price returns to this level, when it happens here, there is likely to be an increase in supply again, and hence resistance. So price will reject from this level and will decline again. The other turn of the coin is resistance turning into support. As the price advances above resistance level here, it signals that changes in supply and demand happened. The breakout above resistance proves that the forces of demand overwhelmed the forces of supply. We observe long green candle and heavy volume. If the price returns to this level, there is likely to be increase in demand and support will be found here. And ultimately price will reject from this level and will go up again. Identification of key support and resistance levels is an essential ingredient to successful technical analysis. Even so, it is sometimes difficult to establish exact support and resistance levels. Being aware of their existence and location can greatly enhance analysis and forecasting abilities. If coin is approaching an important support level, it can serve as an alert to be extra vigilant in looking for signs of increased buying pressure and potential reversal. If coin is approaching a resistance level, it can act as an alert to look for signs of increased selling pressure and potential reversal. If support or resistance level is broken, it signals that the relationship between supply and demand has changed. A resistance breakout signals that demand has gained an upper hand, and support break signals that supply has won the battle. Now you know basics of chart analysis, but there is one more thing to learn before you will be able to start trading, and this is the important component of any trading strategy. In the next video I'll show you some basic principles of risk management. And this is all for today. Thanks for watching. Thumbs up if you like this video, subscribe to my channel if you want more videos, and leave your questions in the comment section below. Bye.